All right. Happy Wednesday night. Hope you guys are doing well. Hope your week is going well. Lots of news in crypto. Good news. And I think it's just the beginning of what's going to happen for the rest of May. So get into just some pre-show stuff, and then we'll run down questions like always. When we get to that, you guys are welcome to ask anything around estate planning, tax mitigation, how to set yourself up for success on the other side of a crypto liquidity event, and anything to do with macroeconomics. Can't give you financial advice. That's what our IA is for. If you are looking for a consult with Digital Wealth Partners, you can go to digitalwealthpartners.net and put your information in, and we will reach out to you. So anyway, we'll kick it off. I just made a post on Twitter because I have this sinking feeling that this is what's going to happen. It's likely in my mind that the judge is actually going to side with the SEC on the recent motion from Ripple's side to seal the partnerships in the recent filing and overrule that and allow those to be disclosed publicly. Why would she do that? Guess it's as good as mine, but the narrative is really good because in my mind, if she were to do that, it'd be a heyday for press, right? And there's 1,700 pre-allocated contracts that have come out in the lawsuit that have been part of discovery, and they are pertinent to the case, right? Ripple did negotiate these options on XRP, some of which have been executed, others maybe not, but we can see, that there's 1,700 of them. So people speculate, that there might be Amazon or Google or Facebook or Meta, I guess is what they call it now, X, Tesla. A lot of the things that were mentioned in the there was a PowerPoint presentation that was put out by R3 back in like 2017 or 2018 that had the Internet of Value and DLT and a lot of companies and enterprises that could utilize such a protocol to be able to transmit international remittances and exchange currencies inside their company, right? Imagine being an Amazon and operating globally. When I was in Dubai, there was all kinds of advertisements for Amazon, and the people there would want to be paid in the currency that is used there. Obviously, US dollars are accepted. They had that option along with their currency there, and that's often the case almost anywhere in the world, just because the dollar does sit as currently the global reserve currency. But most of those people want to be paid in their sovereign currency so that they can exchange that and hold it. If you're in Turkey or Zimbabwe or, Argentina or some of these other places where the currency has been hyperinflating, probably better to get paid in US dollars or gold, something else that's a bit more stable. El Salvador's gone to Bitcoin. That may change. So anyway, it would be very interesting to see the judge overrule that and all those to be publicly disclosed and then rule on the case, there to be an outcome of some type of framework. We're seeing this from Congress where they're going to, they've passed FIT 21. And now I think that was the Senate today, and now it's going to go to the House. So we'll see if it gets past that. But, there's a process. That's why we have the three branches, and they have to go back and forth. And I'm happy for that. I'm glad that we have that here in the U.S. But at the same time, would be nice to see things get expedited. Biden still has not vetoed or approved the repeal of SAB 121. So I don't know if he's just going to let that run out over the 10 days or if he's going to veto it and it's got to go back. Maybe he vetoes it on the last day and then it's got to go back to the House for a revote. Who knows? But I can see that the Democrats are getting a lot of pressure to flop on their stance that they have had on crypto, which is nice to see. It's bullish for the space. We've seen price appreciation. Talked about that Monday. So, but if the judge does flip and those partnerships are announced and the case is finally done, and we get an S1 filed by Ripple to IPO, I think that's a really good wind at their back to increase their valuation previous to IPO. So that's what I'm hopeful for. I normally don't want the SEC to win, but this one I want to see what the partnerships are. So just like I'm sure many of you. So with that, we'll go ahead and hop into the questions here. Excited to get going and appreciate you guys for tuning in on a Wednesday night. Robert, he says, I've just joined Carbon One and very much look forward to learning and growing with the Beyond Broke Mastermind fam. To your knowledge, are there currently available any self-custody wallets that are quantum proof? Quantum is a ways away. I'm just going to be for real. There's a lot of people that talk about quantum computing and its capability to hack and the qubits and where they're at. People that are smarter than me tell me that we're still at least 2 to 3 years away from actual quantum computing. Okay. Now, there could definitely be things that IBM and Google and other, governments may be further along than the private sector knows, right? But I don't think that it's a big concern. It will be. One of my good friends has an investment in a company that is pretty cool technology that's quantum proof. Can't say too much about it, but pretty cool. But as far as cold wallets go, according to David Schwartz, again, these are people that are smarter than me. That's who I defer to on this stuff because I'm not an expert in quantum computing. But based on what he had put out, as long as you've only sent assets into a wallet and never out, you've only ever exposed one key. And a quantum computer would need both keys to be able to hack or get into the wallet. So any cold wallet, if you've only ever sent transactions in and never out, then as far as my knowledge goes, you should have a quantum proof wallet. Now, once you've exposed the other key and you have sent assets out of that wallet, then there's a possibility that once quantum computing comes along, maybe we do see a possibility of that getting hacked. I think at that point, most people will hold their stuff in institutional custody. If SOB 121 does get repealed and we do get some legislation here in the U.S. around stablecoins and the other things that are currently going through Congress pass, I have a feeling that Fidelity and Goldman and Citi and Bank of America and BNY Mellon, a lot of these other large players likely have custody already established to be able to hold digital assets. So, and they obviously wouldn't put that together. They utilize HSMs or some other technologies to make sure that they've distributed the key and it never comes together fully, or it only comes together when a quorum's met and then is immediately sharded again and then redistributed so that it's held in quantum proof that way. So anyway, hopefully that gives you some insight on how to keep your assets in a quantum proof cold wallet for the time being. But like I said, I'm not overly concerned about it myself. Blue Dog Traveler says, did I hear you right? We need 100K in crypto before your group could help us custody our crypto, and it has to be in an LLC, right? Those are currently the two qualifications. So in order to hold digital assets with our firm, you need to be in excess of $100,000 in value, and that has to be it could be a culmination of multiple assets. So Bitcoin, Ethereum, XRP, Solana, Avalanche, Matic, Chainlink, and then a bunch of DeFi protocols. And as long as you could have 20,000 in each for 5 of them and pull that together, you meet the 100,000. We can provide custody for that. And then you did mention the other qualification they do have to be held in an entity. That can be an LLC here domestic to the U.S. It could be a limited company. If you're in the UK, it could be a trust set up somewhere else. We will have to do KYC, AML, and compliance on that entity. KYB is actually what that's called. Know your business. But yeah, we can hold it as long as those two qualifications are met. This one's good. Greg says, I know how you feel about 401ks and IRAs, but I'm considering paying the tax and rolling over a portion of my 401k into a iTrust Roth. I'm 62 and do not see the negatives of this move. Thoughts? For your age, I think that that's a great move, especially if you plan to live a long time and you are willing to pay those taxes right now before the assets appreciate. And if you do get them into things that appreciate substantially inside a Roth, you'll be able to take the distributions of that tax-free. You're older than 59 and a half. And yeah, I mean, those are qualified funds. And these are all tools. So, you know, like everything's a circumstance and when it should be used. I'm not against anything. I just want people to be educated on what they can and can't do and then be able to make the choices that are best for them. So in your situation, I can't give you financial advice, but if I were you, that seems like a great play to me. Let's see here. This is interesting. He says, if a person set up a digital instead to silo there of an LLC, a digital instead to silo there of an LLC, how would that change your business model? I think maybe you typed something out and then deleted it. If you could give me a little more clarity on that, Big Oak, I can run that down. Sorry to make you retype it. Let's see. Go on down. Good questions. Everybody always has good questions on here, and I appreciate that. Mando. I don't know if you're the same Mando that I met in Dubai, but good to see you on here if you are. Any strategy on digital assets and a living trust? You can hold them in there. And this isn't a problem. So there's nothing wrong with that. Most living trusts are set up in the same jurisdiction in which you reside. Okay. Most living trusts, you are the trustee, the grantor and the trustee. So it still opens you up to those assets being taken if you're pursued in a lawsuit. It's not as bulletproof as setting up somebody else as a distribution trustee on an asset protection trust. So not to say they're not protected, they're definitely more protected than they would be in your personal name or even in an LLC. However, with you being the trustee and having full control of those assets and the grantor as well, it costs less and takes less time to pierce the veil in order to get those assets. So it's not that I don't recommend a living trust in some circumstances. I don't know your situation. It could be the best choice. However, for the majority of circumstances, having them in an asset protection trust, either domestic or abroad, would likely provide you better protections from people being able to take them from you in a lawsuit. And the taxes are going to be the same because it's at the trust level. So, this is kind of how I think about living trust versus an asset protection trust. Living trusts are for things that you're going to use over your lifetime that you want to pass to your beneficiaries that aren't going to appreciate substantially in value, and they're not going to cash flow. So, I mean, they could cash flow some, but it's not going to be anything appreciable. So like toys like a razor or family heirlooms, vehicles that you want to leave your descendants or beneficiaries or children, your home or residence in which you reside, vacation homes, gold and silver, all of, maybe other foreign currencies, all of those things could definitely be inside of a living trust. If the gold or silver or the other currencies, I know a lot of people think that they're going to hit it big on dinar and zong and zim and some of these other things in the Middle East. Dinar, I think, is another one. Maybe those you would put in an asset protection trust. Anything that you think is going to go up substantially in value or produce cash flows probably should go there. Anything that's just going to pass to your descendants that you want to leave them and make sure that they're late tax and that you can, it doesn't have to go through probate or get fought over. That's how I personally utilize a living trust. Let's see. Going down here. Jacob Cole says, forgive my ignorance, but how does the gift threshold work in regards to gifting an LLC and then in the future a trust? You're not ignorant at all, Jacob. Most people don't even think about this. I'm the only person that I think even still talks about it because I'm the only one that I think is crazy enough to believe that a lot of people are going to be close to it with it very quickly. In most circumstances, you're going to have time where things run up. So, let's say you'd invested in Solana, at the bottom when FTX happened, you would have had a year and a half to ride it up, take some profit, set up the trust, move your asset in there. It's not going to be that big a deal. But for the circumstances that I think play out for XRP and some of these other assets where their value increases substantially in a very short period of time, you're not going to get the same opportunity. So in that circumstance, it's better to have things positioned previous to the price appreciation so that you have the flexibility and are able to mitigate taxes if you are going to take profit or transition into a trust. So you yourself, each tax number gets a gift tax threshold of 13.6 million currently. And that number is likely to be reduced after next year. Most people are looking it to be halved. It is the highest it's ever been in our lifetime, my lifetime, your lifetime, ever here in the U.S. I talked with a gentleman today from the U.K. Their limit is 400,000 pounds every 7 years. They don't have a lifetime. They just have that period of time, and that's all they get. So if you're under the Commonwealth, I don't want to say it's imperative that you get your assets into a family trust, but it's definitely something you should look at. Especially if you have an appreciable amount that's going to do well, like we all believe. So here domestic to the U.S., the benefit of getting it into the LLC previous to price appreciation, if it's not the trust, is you can get a valuation done on the LLC. So when you do that, you could gift small portions of equity to your children or other people that you want to take care of anyway. Anywhere between 2 and 5%. They come in on the cap table, and then you could reduce the valuation of the LLC by 25%. So just to illustrate this for you with some numbers, let's say your digital assets inside the LLC go to $100 million. You're going to gift 2% to 2 people. They're going to come in on the cap table. It's a couple million a piece. But now the valuation of that LLC could be $70 or $75 million. Even though there's $100 million worth of assets in there, the valuation that we could get on it would be 25 or 30% less. And so now we can gift a greater portion of the assets in there into the trust. We're still going to have to do some other things, but let's say you're real close to the threshold. So you're married, you get 27.2 million, you got 30 million in assets. Gifting those small pieces of equity ekes you under the threshold there, and you can gift all of it into the trust. So it provides you some more flexibility. And then again, if you are going to sell your assets, you can utilize those returns in some way to be able to offset those tax implications, potentially totally, if you're working with our firm. So hopefully that provides you a little more context around the gift tax threshold here in the U.S. and how it works. The sooner you gift your stuff, the better, really, because then you have the full amount of your lifetime gift tax threshold that you can use. Beyond that, you will need to fill out, I think it's 709 is the form when you do gift into the trust. to start the business. You're using the assets as the capital contribution. There's no step up in basis or change in time frame held. Those assets just transition into the business, especially if you are the sole owner and you're the one making the contributions. If you are going to give other people equity in the cap table, they should be contributing whatever percentage you're giving them. If you and your spouse both own the assets, and they're in their common law, or they're in both your names, which they would be if you've purchased them during your marriage, then you gifting it in there, you could go 50-50 with your spouse, no problems, on the cap table. So rambling on there, but hopefully that answers your question. A couple of people here in the chat. Appreciate you reminding me, as always. If you do find value in this, please smash the like button, subscribe, send it to a friend. If you think it's worth their time, it is much appreciated. It does help drive the algorithm and get this out to more people. So, Edward. I don't know if you go by Eddie or not. He says, "Hi Jake, is anyone using the AMM? And what have been the results? Also, best place to buy is silver to hold price-wise." Good question. I'd go to your local coin store. And I know this is going to be counterintuitive. There's going to be a lot of people online that are selling silver that are going to charge you for the shipping, or if you buy over a certain volume, they won't. But they charge pretty significant premiums. If you go to your local coin shop, just Google coin shop near me, you'll find a couple. If you can go build a relationship with those owners, then you have a way to liquidate your silver too, if you need to, for whatever. On the premium, I like having relationships like that rather than dealing with people online, especially when it comes to something that I value. So that would be my recommendation on the silver. And then as far as the AMM, I haven't participated in it. We do have people in the mastermind that are playing with it. I haven't heard anybody that's having, crazy results. Early on, when it was on the Orchestra sidechain, we did have one member that put it into the BTC XRP pool, and XRP, has done what it's done, just trended sideways, and BTC went way up. So they actually made out pretty good on that. But I'm going to stay away from that until we can delegate to the pool and I can mitigate any chance of impermanent loss. And I also want to see XRP appreciate substantially previous to putting it in the pool, just to mitigate the risk of, having half my assets in stablecoin or something else that doesn't appreciate as much as XRP and lose out on those gains. So I do think that they'll be very lucrative long term. The one thing that I'm really waiting for on the AMMs is the last amendment. I say the last amendment. There's two amendments that are still up for vote. You got the Exchange Bridge and then digital identity. Digital identity being native to the XRPL, people do not understand the implications for that. I heard Bob Way at XRP Vegas last year, not this year, but last year in May, say that the XRPL was the best blockchain for identity. And I'd never heard anybody else say that before. But if you're going to be dealing with institutions, the two things that you have to have down before you can scale any of the cool, sexy stuff we want are custody and identity. And that's what, when we went to Ripple Swell last year, that's what Ripple harped on. Custody, Medico, standard custody, Fireblocks, Copper, all of these solutions providers, and then the digital identity component. So once we have a way to KYC, AML, OFAC, BIS, do all that stuff native to the ledger and can do that for the accounts that are participating in the pools, that's when the FIs will adopt that, and that's when things will scale and get crazy. So, but until then, I think we're still going to be, kind of where we're at, where there's some adoption, people are excited about it, but it's not anything to write home about. Carl says, I'm already far into this story. Might as well have some more twists and turns. Let's go. You're not alone, brother. I think a lot of us have been here a while. That's the fun part, right? You'll be able to look back and tell your grandkids. You see all these memes about Bitcoin and be like, in the bear market, what were you doing, Dad? And he's like, I bought more Bitcoin. And the kid's like, legend. That's how I picture conversations going with your grandkids. If you really are able to create generational wealth and take care of multiple generations, if legacy matters to you, I think this is going to be a huge play for a lot of people. Go on down here. Let's see. Appreciate you, Garth, for becoming a member. Glad to see we're providing you value and you want to hang out with us. It's humbling. Let's see here. Here's one. Henry Lou says, appreciate all that you do. Say post-moon, one has FU money and ready to retire. Do you guys offer a set it and forget it money management service? I hope that makes sense. It absolutely does. And we have a wide variety of services that we offer people. So we do financial planning, and we also do wealth management. Financial planning is going to be more for people that just want somebody else to look over the things that they're doing, provide insights or other opportunities, not necessarily the funds themselves. Whereas the wealth management component is more what you're discussing here, where you work with our firm, we put it in our models or build out a model that's specific to you that fits your lifestyle to generate the income, allow you to borrow against your assets tax-free, and kind of a set it and forget it and know that it's good, generating more and more revenue on itself to the point where it's way more than you'll ever need type situation. That's and we have two objectives at the firm. The first objective is never lose XRP. The second objective is defer to rule number 1. So, just want to mitigate as much risk as we can and provide tax-free returns in the highest amounts possible for people. Let's see. Atlantic Living, always good to see you. Hope you're doing well. It says, Jake, with all the recent positive news, do you believe price appreciation will be expedited before the expected September-October timeframe? I don't know who put out September-October. There's multiple things that have to happen before we see price appreciation, in my opinion. I could be wrong. It'd be great if it just shot up tomorrow and none of this took place. But in my mind, we don't necessarily need regulations. I'll say that. But we do need the capability for banks and FIs to hold digital assets. So SOB 121 got to be repealed. Stablecoin regulation would be a big move forward here in the U.S. That would topple Tether. Tether would have to dump its Bitcoin reserves and buy more treasuries. They could sanction Tether with that. The other component, the reason that stablecoin regulation is so imperative and the capability for FIs and other banks to be able to hold digital assets here is if they're all going to issue stablecoins. As soon as they have the capability, I bet they have them waiting in the wings. Like, we've seen all these fintech platforms come out for it, but I'm pretty confident that maybe some of those Ripple partners that might be disclosed, if the judge decides that that's the way she wants to go, likely probably have stable coins waiting, but they're going to need those treasuries, right? And that's why it's so imperative that we have demand here in the US for those, because I'm still pretty confident that Japan ends up dumping, and so does China. We're having continual selling pressure as they divest from our treasuries and move away from the US dollar. And so in order to subsidize that and stabilize the bond market here in the US, you would need something to drive demand, and stablecoin regulation would absolutely do that. So the two prerequisites there, like I mentioned, SOB 121 needs to be repealed so that they can hold digital assets free and clear of the SEC scrutiny, which, the OCC has said that they can, but they're still they need an absolute assurance that they're not going to get pursued by the SEC for stablecoins. So we need that. And then stablecoin regulation, I think, is the next component to really drive demand for treasuries. And then, like I said, be able to stabilize the treasury market. And maybe we see them dump before then, and both those things get rushed through to be able to fix that. Problem, reaction, solution type situation. But I'm looking for these events. I don't really hold like a time frame in mind. Seems like it could happen sooner than later, just based on events that are transpiring. But they could all just go on vacation tomorrow, right? Like, I wouldn't put anything past this administration and what's gone on up to this point to be able to stymie or stall things. And so maybe it does take till September, October. Maybe it takes till 2025. But those are all of the, like I've talked about before, dominoes that I see standing that need knocked over for us to get real adoption for the XRPL and these other utility networks. This is interesting. He says Hedera is quantum resistant. Hashgraph is very robust and secure. If you guys haven't looked into that technology, it's different than blockchain. It is more secure and very scalable also. It's my belief, I could be wrong, don't have a crystal ball, that Hedera actually ends up being the base layer for Web3. I think that the majority of dApps and apps end up being built out on the top of that network and not Ethereum or Solana or even XDC. I think it's likely going to be Hedera. And there's only going to be 3 to 4 networks that are the layer 1. And anything beyond those are just going to be smart contract protocols, layer 2s, other things that are specific niche use cases that are interoperable with those main chains. In my opinion, I could be wrong. That's just my thoughts. Let's see here. How secure is my cold wallet with the threat of a SIM swap attack? It's not. If it's on your phone, it's not secure. The things that you could do to secure that, so like if you use the Zum Wallet or Xman now, the keys for that, you scroll. So if somebody did have malware on your phone that was keystroke, it like tracked them, you're not going to get that because it's going to be random and it's going to be toggled every single time to put those keys in. So I like that. And then also if you're using a Tangent card or some other physical item to tap the back, you're going to be secure there too, because they're going to require those keys or that card to tap the back of the phone to be able to execute a transaction. So both those things are great. Multi-factor authentication on wallets. If you had to have 3 things, so if you got 2FA, you got a password and you get an email or a text or something, probably great to have. But yeah, if you have just it's not really a cold wallet if it's on your phone most of the time, unless it has some other mechanism that's a physical item that you're touching to the phone to be able to execute a transaction. Man, a lot of good people watching, a lot of good questions. If you do have any questions, please post them over here in the chat. Happy to run them down for you guys. Honest Aim, thank you, brother. Appreciate you in the super chat here. He says, thank you for all you do for us. I'm Carbon One. An article was posted about some states outlawing CBDCs, Indiana, Florida, South Dakota, Tennessee, Utah so far. Your thoughts on how this would possibly work? So there's a bill currently in Congress that would remove the capability of the Fed or the Treasury to issue a CBDC. I think that probably passes. I think that there's a lot of people that have concerns that the government would use a CBDC to track their spending and monitor everything and have surveillance and a social credit score and some of the other things that China has. I don't think that's ever going to fly here in the U.S. I think that our social norms are very different than China. However, if you just completely remove the possibility of that happening, even better. Jerome Powell has talked about private stablecoins, and they looked at the possibility of a CBDC. I don't think we're going to get a CBDC here in the U.S. I think it's going to be all private stablecoins that are issued by financial institutions and backed in the manner that the stablecoin bill requires. But it's interesting that certain states are, outlawing them. And then you also got other states that are adopting gold as currency again. So real money. I don't think gold is going to make significant ROI. I'll just say that. I've said that before, and people will get mad at that. I hold my emergency fund in gold and silver, physical gold and silver, and I think that that's a great way to have exposure. Mitigates your capability to just spend it easily. It really has to be an emergency for you to get to it, and it is going to hold its purchasing power. Right, that's the whole point of gold and silver, is they hold their purchasing power from when you put the value into them. And obviously, as long as there's paper contracts that can be manipulated and people's emotions cause things to go too far one direction or the other, and there is sometimes a real ROI on those assets in comparison to other assets. I've talked about this before, but if you haven't ever watched Mike Maloney's Wealth Cycles, fantastic video. He talks about if you had a $3,000 home in like 1920, and you were able to mark the top and bottom, sell the top and buy the bottom of the real estate market and gold market over time, over the last 100 years, you'd have like $50 billion. You can't ever divest from real estate that quickly into gold. But, obviously if you were scaling out and scaling in, not going to capture all those gains, but it would still be pretty good. So he looks at stuff priced in gold all the time. I think that's a great way to look at it. The Dow priced in gold is interesting. I watch another channel called Game of Trades. If you guys don't follow them here on YouTube, go check them out as well. I think that they put out a lot of good data. It's a young guy that runs that channel. I've been following him for a while. He's pretty sharp. So anyway, off on a tangent there. But yeah, I think that this is good that they're outlawing CBDCs, and I think that Congress probably does that as well. Let me see if I missed any here. Tauticus. It's like it says, is the SEC wanting to hurt Ripple as a business by having them disclose the 1700, or are they just that petty? I don't understand how that would hurt Ripple in any way. Like, explain to me how that would be bad for their business if it came out that they had 1,700 pre-allocated contracts with global governments, central banks, other large corporations, FIs, fintechs. Like, if they are the partnerships that I think they are, the only thing it could do for Ripple's business would their private equity would go through the roof, because people would be like, oh my gosh, I can't believe they have all of these proprietary contracts with all of these large players, right? Disclosing that would be you would have to do that as a public company. So if they're going to IPO, they're going to have to disclose those things anyway. And if that's their intent, Brad has said multiple times that they don't have to IPO, but they do want to provide liquidity for their investors, and that is their priority. An IPO would do that. I know that Bob Way would love to have an IPO. And a lot of other people there that hold large amounts of equity in Ripple would too. So I don't think that hurts them in any way. I think that that's kind of a reverse tactic, and it would actually benefit them. I don't think it would. I think the SEC. I think that's what they wanted the SEC to ask for, and the judge will probably grant it, and I actually be in the benefit of Ripple for where they're headed. Here we go. Dustin Broder. Sorry if I butchered that. He says, hey, Jake, any neat tax efficient strategies you've seen for retiring your parents. I mean, put them on the payroll, right? There's a lot of people that would like to do that. Their parents have worked very hard over their lifetime to support them and given them a lot of opportunities and things. And I think it's right. There's a lot of cultures that is the parents' retirement plan is the children doing well so that they can pay for their retirement. A lot of Eastern cultures are that way. So nothing wrong with that. To be tax efficient with that, ideally you put them on the payroll, or maybe they own equity in the companies, or they're a beneficiary of the trust, or they're still going to have tax implications for the income that they're receiving from you. Now, you could gift them some assets, or give them equity in the company that owns the assets in a small portion, and allow them to draw loans against the assets that were, delegated and earning income that could pay that note back without them doing anything with the money that they got. And that's one of the strategies we're looking at, is how do you draw loans against your assets while they are participating in some type of earning protocol or mechanism that'll cover the principal and the interest on an annual basis to make sure that you never lose any assets, but you have tax-free income every single year, which is a loan that's immediately, not immediately, but within 12 months paid off against your assets. So that would be the strategy I would probably employ just to retire my parents. I would look at gifting them a portion of your assets, or giving them some equity in the company that owns the assets that allows them to participate in distributions, a salary, and then also loans against that collateral that they could take out tax-free. Hopefully that's valuable for you. Let's see here. Hi, Jake. Marnaki have International Realty. Does your business offer a service to open bank accounts outside the USA? And if so, what is the process to be in the terms? Process to be in terms of time frame. Thanks for all you do. We do have partners, especially across the broader EU, that can do Switzerland, Portugal, Nevis, Jordan, Monaco, Cook Islands. A lot of the favorite jurisdictions to hold your assets in. We can get bank accounts established there. We work with a firm to do that. And then we do have one here domestic to the US that can help you with that as well. So timeframes vary depending on jurisdiction, depends on you, depends on the background check, there's a lot of variables there to be able to give you timeframes. But I would say, I've seen it done as fast as a couple weeks, and I've seen it take as long as 6 months. So all just depends on your circumstances, where you want to do it, and the other variables I mentioned. But yes, we do have those resources, and happy to share those if that's something that you're interested in. I think our emails are back up. I'm hoping that they will be tomorrow. So if you do want to email and ask for that, you can. Just know if there's a latency in us getting back to you. That's the reason, as our emails have been down. We're migrating servers. So it's info@digitalfamilyoffice.io. Dennis, Mr. Foster, he says, hey, Jake, how's it going, brother? Appreciate you being here this evening. He says, what's your thoughts on this recent rapid push for crypto regulatory frame work to buy the house? Do you think XRP moon before Christmas? Like I talked about before, I'm watching for events to happen. Until those events happen, I think we just coast along sideways, maybe even go down. If we go up a little bit, it's not going to be anything appreciable that people want. If we do have a small bull run, I don't think we break all-time high unless we do get actual traction for utility, for XRP in particular. So, no, that's probably not what you want to hear, but just watch for the events. They will be on the news. You will know when they're happening, and you can sit back and smile while everybody else is freaking out. Big O. Okay. So he says, if I set up a domestic asset protection trust to silo utility assets, how would you structure trading LLCs to trade and hold digital assets if you also have private equity? Where is that managed for an IPO? Okay. Much better put together here. Thank you for kind of lining that out for me. You don't really, I guess you could call it siloing your digital assets. You're protecting them. You're putting them inside of a vehicle that you no longer have the ownership of, but you could have full control. I can't draw the diagram on here. We don't have the functionality to do that. But if you can imagine with me, I'm going to use my hands because I'm a visual person. So I always like to have a management corporation that maybe you have, you and your spouse might have a living trust that sit on the cap table of that. And then underneath this management company here, down here, would be an LLC that would own whatever the assets were that you were managing. And you have a contract this way, back up here to the holding corporation between the underlying LLC and the C Corp. Okay. This C Corp does not own any equity in the LLC. It just is paid a fee for managing the assets. Okay. And then off this LLC still down here, management corporation over here, would be a trust, or the DAPT that you mentioned, the Domestic Asset Protection Trust. And it would own a portion of the assets, or maybe, all of the equity in this LLC that you gifted to the trust. Okay. And this way you got the management corporation. So you're still in control. You can pay yourself, that manages these assets, but the assets themselves are owned by the trust, or the equity, that's holding the assets. The equity of the LLC that's holding the assets is owned by the Asset Protection Trust. There's enough layers there, and there's also a reason for that when it comes to the tax implications for the way that we set it up that way. And then underneath, the corporation, you might have a separate LLC that owned the private equity, or it could be in the same LLC with the digital assets. Really, you want to set up LLCs that silo risk and segregate those things away from your estate in case there's potential lawsuits. So, like properties, somebody could fall on the property, something could happen at the property, somebody gets shot, whatever happens. If they sue the property and it's in its own LLC, that's all they can get. They can't come after the rest of the assets in the estate if it's separated out like that. Now, if you stuck the property in there with your digital assets, now they can come after the digital assets if they sue the property, right? So you don't want that. So you want to segregate things out that are going to have potential for lawsuits. Let's say you own a company, right? So I'm a big proponent of buying boring businesses that cash flow and don't require a whole lot of effort. You can put a manager in, that does things for you, or have a management company run them. Again, those are something else that you would probably silo out, and they would be their own LLC because they're a company, right? I mean, sometimes they're not. Sometimes I see people that, anyway, I won't go down that road. But the private equity, the only circumstance in which that could go poorly is if you were participating in somebody else's SPV and you didn't own it directly. And even if you did own it directly, if there was some complications with the company where shareholders were impacted, you would want that siloed. So it's always good to have a special purpose vehicle when you are making an investment in a company, even if it is in somebody else's special purpose vehicle. So that's something that we do at Syndicately. We're trying to make that super economical for people to spin those up and make allocations and silo the liability associated with investments there. But yeah, if you're not overly concerned about that in the private equity situation, if you're not concerned about the company that's providing the SPV or the company itself that you're investing in, you could lump it in with the digital assets and be okay. But just as, if you do have the means and the capability, it's always good to silo each individual investment into its own entity so that, if there were anything that went wrong with it, It's not going to impact the rest of your estate. And like I mentioned before, you would have that management corporation at the top that didn't have equity ownership in the LLCs. You'd have trusts set up that own the equity in the LLCs, but the management corporation could take, proceeds for managing those investments. Hopefully that helps. Scroll on down here. I saw somebody say Black Swan. I lost it. I don't know where it went. We'll see. Black swans are black swans for a reason. Nobody knows what they are or when they're going to happen. Let's see here. Excuse me. SoFi. I don't know on that deal. I know a lot of people that were bullish on that company, including Kevin O'Leary, but I haven't seen how it's performed. It's not something that I've been following. Based on Michael's his comment here, it's probably not doing well. I hate to hear that. In a down market, companies that are holding assets or doing DeFi or providing other things alongside that, probably not going to do well either. Unless they have a viable business model that actually provides value, like Ripple, and then they continue to grow and expand and increase their revenues, even in a down market. That's kind of one of the telltales too. If you are in a bear market for an asset class and there's a company that's continually developing revenue and partnerships and growing, while other ones aren't doing so well, tells you that they actually do have a viable business model, while maybe what you thought was a good business. You want things that are recession proof. I'll just say that. No, we already went through that one. We get down here past, for whatever reason, it keeps scrolling me back up. Here we go. Thank you, Neo9, for the super chat. He says, LLC done. Awesome. Open another for Fave Staked Coin. I don't know what Fave Staked Coin is. I'm actively running nodes. Job performed. 3D AI rendering. Little home biz. Thanks, Garth. Yeah, I would. So those are going to be taxed differently. And if you want the benefit of long-term capital gains tax, I would separate those long-term holds out from a staking or node business. I would have two separate LLCs for that, and I would have two different operating agreements. And I would have one that's in the business of staking and earning income with crypto, and then I would have another one that is, holding those assets. And you may, be able to produce income with that later. But if you're actively running nodes and you have hardware, those are things that you can depreciate also, right? If you're buying the infrastructure for the nodes, you can depreciate those assets against your income and be able to write that off. I will say this about staking income, and this is something that we're looking at for our clients and a benefit of working with us. If you do hold your assets in institutional custody and they are staked or delegated and the rewards are paid to the wallet that we hold, we believe, we have a letter from our CPA that says because there's multiple signatures that are required to remove those funds from the wallet, they are not taxable. So anything that encumbers your ability to utilize those assets when the distributions are paid creates a barrier for taxation. So another way that we've seen this accomplished is like Atomic Wallet. If you're staking the Atom token, there's like 20 days that is required for you to wait when you unstake them to be able to take the rewards out. So any staking rewards that you're earning to that wallet, because of that time frame, it encumbers your ability to immediately use them. You don't have full control, which is the current law around that, full control. There's no tax implications until you remove them, and then that's when you would have the tax implications. So just something else to think about if you are running nodes and accruing income. If you can put some type of barrier between you and your capability to spend those things, either multi-sig between you and another party or some type of lockup period, you can mitigate those taxes until you actually do take the distributions from the wallet. Henry Lou, thank you for the super chat, brother. He says, thank you for answering my question. Always grateful. Lucky to have you in the space. Everyone needs to join the mastermind group. Worth every penny. Thank you, brother. Thank you for the kind words. And I just want to help as many people as we can. I like getting on these. I get a lot of fulfillment from interacting with you guys and answering questions. I know that there's not a whole lot of other people in this space that even talk about any of the things that I discuss. And if they do know this stuff, they're only dealing with high net worth individuals. It's not something that they're addressing with the public. So, I'm a little guy, but, a lot of people have started to find me and we're gaining some traction. So I'm happy to help answer questions as we can. And thank you again for the kind words. And like you said, the mastermind, Beyond Broke Mastermind, we do talk about all this and more, talk about the private deals and other things in there as well. The law says, is a 10x portfolio return possible by mid 2025? I have no idea what you're invested in. It could be a 10x loss if you got leverage. I don't have any context on that. You could have 1,000x return by 2025 if you're in the right meme coin. It's definitely possible. It's all depending on market conditions, your investment, how much you have invested, and if you're using leverage, if you're not. Just a lot of context that's missing there around that question for me to be able to answer it accurately. But in general, if is it possible, I would say yes. Chris, can you explain to me the actual what's going to drive quant's price up aside from speculation? Because I'm having a hard time with that. And maybe it's something I just don't see. Happy to be wrong on it. But apparently, from my understanding, it allows you to pay the fees to be able to use the license for Overledger. It's not actually transmitting value within the network or moving the value. So again, I could be ignorant. Maybe I'm missing something. I made money on Quant, just to be transparent. I got in it when it was like $7 when Kevin Cage first mentioned it on his YouTube channel. It's great, but I've divested a long time ago because I don't see the long-term utility in it. But again, if you want to put here in the comments, maybe a YouTube video or something else that I should watch to educate myself better, I would love to see it. Let's see here. Lots of good stuff here in the chat. Heath says the United States is never letting the gold prices appreciate to the debt clock calculations. The U.S. is not going to be pegged to I guess he means ounce of gold, but stablecoin could be backed by gold. So gold is a tier 1 asset. It was relabeled a tier 1 asset in 2019 by the BIS after 50 years of being a tier 3 asset, and only U.S. Treasuries being a tier 1 asset are riskless in the eyes of that institution. Tier 1 assets can be used as collateral for derivatives, and I think there's too much debt at this point to actually all just be pegged to gold. We do have a lot of gold. Gold actually sits at like $42 an ounce on the Fed's balance sheet. They haven't increased the value. The prices that people are talking about for gold are astronomical, like $50,000 an ounce. The only way that happens is our currency collapses, which you don't want, unless you're in gold. There's actually a gentleman in 1933, the few years before, he had stockpiled gold. And then Roosevelt mandated that it was turned all in, and they seized it from him, and he actually committed suicide, which is not so good. I can't remember the gentleman's name, but I don't think that's going to happen this time. Like I said, I'm aware that the U.S. has plenty of gold to be able to shore things up if they need to. We don't have the oil reserves, which is concerning, but we might have some other things that I think we could use. Maybe a digital asset. I'm hopeful. We'll see. But anyway, yeah, any of the CBDCs that are issued will be pegged in some capacity, in my opinion. We won't have floating exchange rates anymore on the other side of the revaluation and how things do shake out in order to stabilize markets. There's a lot of people that trade FX right now, and I've told them that, and they're like, get out of here. That's not going to happen. I'm like, okay. Again, maybe I'm wrong. I would like fiat to go away. I say that, like I understand this system and how the debt-based modern monetary theory works and how you can use it to your advantage, especially if, interest rates are coming down over a period of time, which we've raised. And I do anticipate things coming back down a little bit. In doing that, if you are able to draw debt against things and then pull equity out and refinance as the value appreciates, it's very lucrative. It's a positive feedback loop. So going to have to recalculate some things if we do get an actual asset-backed currency system. But I think it will be good for the common person that does want to save and has been told to do that their whole life, when in reality that's been a lie. Because you've just been taxed through inflation without knowing it. But yeah, I'm hopeful that we do get some type of peg to gold where it's stabilized. Maybe it's a value that is slightly higher than what it is at today. But they, again, haven't revalued gold on the Fed's balance sheet since 1970 something. So if they revalue today, it wouldn't eradicate all of our debt. But it would make a big dent. And again, I think we have enough gold reserves that we'll be okay. So I know people are salty about the debt clock and the manipulation of paper gold and all those things. Can't do anything about it. Just have to understand those are rules of the game and play it. .biz says, can revealing Ripple's partners have a positive effect on price action? I think that it definitely could. Imagine seeing which ones were actually executed and who holds XRP at this point, right? I think that would go a long way for people wanting it. If there were some very large institutions or players or Amazon that held XRP and were going to use it, even if they weren't using it yet, if you knew that they had it, I think that would say a lot, right? And could drive some pretty significant demand from other institutions to come in and purchase what's left on the retail market through the exchanges and drive price up that way. Might get an ETF. I know everybody's talking about the Ethereum ETF, but still think Larry Fink and Brad, both times they've been asked about the ETF, they're like, don't ask me about that. Can't talk about it. Okay. So you mean it's coming. But yeah, I think that there could definitely be some positive price action that happened to XRP itself alongside Ripple equity if some partnerships were revealed for people that hold significant amounts of XRP. Man, we've been going on a little over an hour. Probably hang out another 30 minutes here, and then we'll run it down. Chris says, if you done research and you see all the countries and all the banks, they're going to be using it for the infrastructure. You don't even need the internet to transfer wealth on the XRP ledger. I don't know if he's talking about Quant. He's talking about XRP because he mentions XRP here at the bottom. I would agree on XRP, but you had asked about Quant earlier, so sorry if I misinterpret it. Let's see here. A lot of back and forth here in the chat. Appreciate that. Drives the algorithm, so thank you all for that. Again, if you do like this, please click the thumbs up, subscribe, share it with a friend. It is much appreciated. Let's see here. I'm also a fan of Decent. If you guys don't know, we are affiliated with them. I don't know if it'll be in this video, but the majority of our videos, we do have an affiliate link. They have the biometric. They have the most assets that you can hold on a cold wallet. We did get to meet with one of their area representatives last year at the XDC conference. Holds XDC on that wallet too, which is difficult on Ledger and some other ones. So if you hold that, it's a great option. And I too am a fan. Living Legacy. Yeah, see, here you go. Taylor's got the exact scenario that I think is going to play out. He says, the SEC sued Ripple, and what did you do, Grandpa? I bought more XRP, son. Legend. There's that meme. I think that's probably, and again, I have a lot of bias. It's the only position that I hold, so take it with a grain of salt. I could be wrong, but that's how I'm hoping it works out, and what I get to talk to my grandkids about. Let's see here. This person has asked, appreciate all that you do. Thank you for the kind words. They said, I've learned so much. I already have an LLC. Awesome. And a holding company. Can I still set up a consultation with you to review and ensure that they're structured correctly? You absolutely can. Yeah. You would just go to digitalfamilyoffice.io and you can book a time with myself or one of our other representatives to review what you have and make sure that your operating agreements are written the right way and everything is set up. Let's see here. This is good. He says, if Fit 21 goes through both the House and sign into law, do you see litigation brought against Coinbase being dropped entirely, or just the unregistered securities, but leaving the staking aspect in court? This is just my opinion on this, so take it with a grain of salt. Like I said before, I don't know everything. I believe that pure proof of stake is a security because you are putting your assets into a pool that somebody else runs and anticipating them to earn you income or returns. So to me, pure proof of stake is a securities offering. So Ethereum in particular is a security, in my opinion. Brad Garlinghouse has come out and he said that it's not a security. So again, I could be wrong. In my mind, you're giving consideration to somebody else in anticipation of returns because of their actions. Seems like a security. So if that is in fact what plays out, Coinbase would be liable for the staking rewards they've paid out to people and selling unregistered securities. Without a license, they would need to be a broker-dealer, and they would need to be licensed, aside from the money transmitter licenses that they have, as a broker-dealer and an ATS here domestically in the U.S. I think that's how that goes. I could be wrong. They could go private through an acquisition. Somebody else could acquire them. They're already a very large company with high valuation, so it'd have to be somebody significant to buy them out. But again, if they were to lose the lawsuit, maybe their valuation drops on the public stock market and somebody else is allowed to come in and purchase them that does have those licenses. Who knows? But yeah, I think that they're likely going to have to pay fines for selling unregistered securities, because again, in my mind, pure proof of stake itself meets the prongs of the Howey test, in my opinion, and does qualify as a security. So delegated proof of stake, I think you can dance around that a little bit because you're just providing them with your voting power, right? But you're still holding the collateral. There was an exchange of consideration. So I think there might be some quasi way that they circumvent the securities law with that. But pure proof of stake, where you do put your assets into somebody else's pool and anticipate returns, I think ends up being a security. Let's see. People ask this question all the time, but I'll go ahead and entertain it. How much XRP would be considered retirement worthy for? I don't think you're a chump, brother. If you're here, if you're listening to this, if you have any inkling that this is important, you're definitely not a chump. You're way ahead of the curve. Most people, 99.99999% of people have no clue that this asset even exists, even if they know about crypto. So for you to have an allocation, for you to be watching the channel, for you to be here and asking a question, you're definitely not a chump. And don't talk about yourself that way. Words mean things. So for the question, this is how I determine what financially free means. This is the way I'll answer it. So I don't know what this number is for you, but this is how I would calculate it. I would figure out what my the lifestyle I want to live costs. Okay. Maybe that's $10,000 a month. Maybe it's $100,000 a month. I don't know how extravagant you want to live. Okay. Whatever that amount is, you're able to generate twice that amount from passive income. That to me is retired, financially free, FU money, whatever you want to call it. That's the number. Okay. That's going to be different for everybody. Some people live modestly. They're happy with things. They want to go on a couple vacations a year. They want to enjoy time with their kids and go to the soccer game. They're not trying to fly on private jets or build companies or do anything extravagant. They just want freedom in their life. And that might be, $20,000 a month goes a long way when it comes to that, especially if your home's paid for, and you're not doing crazy stuff. So, figure out what that number is for you, figure out what twice that amount is, figure out what you think XRP is going to go to. I would use like a 5% interest rate. I think that's completely reasonable. We'll probably be able to generate significantly north of that with what we're working on. But just as, kind of a low threshold, figure out what those amounts are. And then that would be the amount of XRP that you would need to be financially free or retire. And if you're generating twice that amount every month, you have more than enough. You can put money back, have an emergency account, do other things beyond what you just, need to pay for. Don't live above your means and enjoy your life, So, like I said, that number is going to be very different for everyone, but that's the way that I would calculate that. Scrolling on down here. I'll give this one. So Chris says, I believe that what we're seeing from Gary Gensler and the whole sideshow is just to get rid of all those other tokens or have them move over to XRP, XLM, and XDC rails eventually, and a few others. Yeah. Like everybody thinks that Gary and the SECs they're bad people. I think Gary's on our team. I've said that before. I know it doesn't seem that way from the narrative that's been put out, but I know I feel really blessed and grateful that I've had an extra almost 3.5 years since the lawsuit was filed to buy and continue to add to my positions or position now. But yeah, clarity around XRP in particular, if we don't get full clarity from Congress on the rest of the market, there's only one solution, right? So, and because we do have that precedent in the XRP case, I think it provides a lot of tailwind for the legislation being pushed through Congress. Dotbiz says, wasn't gold at 1,600 at the top of the pandemic. It's at 2,400 now. I'm more bullish on silver too at this point. again, there could be real ROI on that if there's emotions involved and the market is manipulated, which it is with paper. But if we move to a backed market, gold and silver are to preserve your wealth. Okay. Same thing with like the S&P 500, in my opinion. You put your money in there, you lock in your purchasing power at the time you made the investment. There are times when you do have, so as an example, you point this out here. And Game of Trades pointed this out the other day. So from 2007 to 2008, the market was up 15%. So was gold and silver. Or maybe it was 2006. I think he showed 2006 to 2007. The market and gold were up 15%. 2007 to 2008, gold was up 33% in 6 months. We've seen that just recently here too, is gold has made a rally while the S&P's maintained the same trajectory. That's normally a precursor for a pretty significant downturn or a depression or recession in the market and the economy, based on his synopsis, not mine. So, if you are taking profits now and you've been in gold, that's not what people are telling you. They're telling you to buy more. And I'm not telling you what to do, but 33% gain in a couple months is pretty good. The premiums on gold right now are pretty good. If we do have a significant downturn in the economy and we do see depreciation on some of these other assets, you do have, what happens to cash? I don't know. I don't know what happens to treasuries. I think they're good. I think they'll shore it up though. They can't let the currency collapse. Otherwise we have Mad Max, and what's the point? So, silver is interesting. If you look at the gold to silver ratio, it is, it normally swings, on the far end, somewhere between 70 and 80 to 1, back up to like 20 to 14 to 1. Biblically, I think it's 14 to 1 is what you're looking at. Traditionally, it's like 40 to 1 if you look at the full term over the last 50 years of what that ratio has been. So you can kind of play that. Again, I like pricing assets in gold and looking at that ratio and then trying to decide, when to buy or sell based on that. Right now, silver, to your point, I think is undervalued. However, I have a hard time seeing $100 silver. And hear me out on this. Again, I'm not Andy Scheckman. I'm not, Mike Maloney. I'm not Peter Schiff. I have a different perspective. I watch all those guys and I appreciate them. I love a lot of their content. I'm skeptical. If you did see silver go to that, there's just a lot of implications, broader implications across the economy and cost of goods for production. Maybe they migrate to other materials, which definitely would have to happen in the supply chain. But it would cause some pretty significant implications during that migration. Companies would stop using silver in a lot of circumstances in which they currently do. And people do, you enjoy things like your cell phone, solar power, a lot of other things where silver sits in the middle and conducts that because price has been held down over the last 50 years by JP Morgan. Do they get paid to do that? Your guess is as good as mine. Making money on both sides, spoofing and a little compensation in the back pocket. But yeah, there's just a lot of more broader implications than just silver go up, and so that's why I'm hesitant to believe that we see some of the price appreciation that a lot of people are hoping for. Gold, I get. Silver, to be seen. And I will say that it is the only asset that's still undervalued in comparison to its top in the 80s. So there's a lot of things that point to it going significantly higher than that. I'm happy to be wrong. But yeah. Money bags. You bring up a good point here. PolySign does remain frozen on Link2. It's also something that I'm not happy about. We have funds in over there from the mastermind where we made an allocation, and ours are stuck too. So I'm in the same boat with you. A lot of us are. Haven't had a public announcement from PolySign on where they're going to head, what they're going to do. I I know that, we're still good. Ripple made the acquisition of Standard Custody, and so our clients are going to be working with Ripple moving forward for the custody service that we have there. All that's good, kosher. Had people sending transactions today. Had like one of my clients likes to send micro deposits a bunch to make sure that things are going to be kosher before he sends the full amount. So I think we had 40 or 50 transactions today. Anyway, I don't know how that's going to work out. If I had any insight, I'd love to share it with you guys, but I don't know any more than you do. I'm hopeful that we do see some situation where people get rectified and maybe there's an acquisition like, Jack had alluded to a lot of times in conferences, but that's yet to be seen. So hopefully it works out for us and yourself. Dennis says, after setting up a state with the C Corp, can I spend that income on anything I want without running into commingling with personal funds? So if you're spending it out of the LLC, you cannot just spend it on anything you want. We see business owners that do this, that pay for their daughter's quinceañera and stuff out of the LLC. Please don't be that person. Please pay yourself distributions and spend that on personal stuff. When we're calculating the valuation on a company and we see this type of stuff, we call it SDE or seller's discretionary earnings. We add those back to the valuation. It's a complicated accounting mess and a nightmare, especially if you do plan to exit in any capacity later on. Please don't have crappy accounting. Guilty of it myself earlier in my career, but we do our best to make sure that everything's kosher now. But yeah, I think what you're alluding to is, can you spend the money in the C Corp for things involved with the business? And the answer is yes. So supplies for your office, buy those with the C Corp. Vacation somewhere, there's a conference that has to do with your business. Spend the money from the C Corp. Insurance policies that you can borrow against. You can borrow against that and spend that on personal things, and there's no tax implications there. Buy a vehicle in the C Corp. Cool. Buy some real estate that you can office out of or, do things with. Cool. Spend it out of the C Corp. You can depreciate that. There's a lot of things that you can do. Don't buy groceries out of the C Corp. Okay. Don't pay for your dog's grooming out of the C Corp unless he's used in the marketing material. If he is, then great. You can pay for that out of the C Corp. So anyway, just be smart with that. You're going to have to pay the C Corp. You don't have to pay yourself a reasonable salary. Pay yourself $1, Bob, like Mark Zuckerberg does. And you take distributions, and you're going to be taxed at the corporate level and then again at the personal level. If you are spending things, from the company account, it needs to be on company-related matters. You do get audited. You'll slap your hand for stuff if you're not. So just keep that in mind. I see it all the time, though. So if you do it, I'm not condoning it. I'm just telling you it is prevalent. Dill. Hey, Jake. So I've bought my parents some XRP, but they're older and have no idea how crypto works. What would be the easiest way for them to utilize the money after price appreciation, selling 20%? Thanks. I hope that you have it in separate wallets from yours. That's one thing that I see often that is a problem. I would segregate that out. I would make sure that theirs is in a separate wallet from yours. You're going to gift it to those wallets. So if it's less than $18,000, cool. You can gift it. I think it's actually like $14,000, but it's an annual gift that you can give to spouse, children, parents, whatever. As long as it's that amount, you can gift it same year. don't have to file anything. You're good. Actually, write it off. And they don't have to pay taxes on it because it's below the minimum threshold for income for them. And it's a gift. So that would be my first piece there. Just if it came out of your account, make sure it's gifted into a separate wallet. If it came out of their account, you just helped them do it. Cool. Make sure it's in a separate wallet. After price appreciation, I would get them into qualified custody with somebody. We're happy to help with that. If it's not us, that's cool too. There's going to be lots of other providers that I think, would be happy to hold your XRP post-liquidity event and manage it and pay you returns on it. We're obviously going to be looking for ways to give you the most flexibility and options when it comes to that. And we're way ahead of the curve in comparison to anybody else that I talk to. Everybody else is focused on Bitcoin, Ethereum. Nobody else I know is looking at XRP and the amendments coming on the network and working with institutions to set up things now. So, I got the logo behind me. I'm going to rep it a little bit, but again, I would hold it with a qualified custodian. I would, lend it out somewhere. Maybe if you are going to sell 20%, just be aware that you're going to hold the taxes to the side. So if it's, I don't know how much 20% of what you have is, I have no clue. But that's going to be, if it's long-term capital gains, it's going to be 15 or 20%. If it's short-term capital gains, it's taxed as income. So just be aware of that. I would set that aside when you do cash out so that you have that to pay Uncle Sam. And then the rest of that they can use. And then, I would delegate the rest of it to a liquidity pool or a smart contract or loan it out to be able to earn interest on it. And then those returns, you could pay them as income, or again, you could borrow against the asset and then pay the loan off with the income from the asset would be the way that I'd be looking at it. So happy to work with you on all that through Digital Wealth Partners. But that's kind of the mental model that I would be running through. Let's get on down here to the end. Jeremy Side says, please see question and comment if able. I will look for it. I just ALT on his live to join you on your channel and mention you spoke highly of him. Let him know you're currently live. Yeah, would love to have T on sometime. I'd have to send him a link. We use Stream. It's not StreamYard. Streaming. It's a Studio Talk is what we use. So I'd have to send him a link, and then I could pull him in here and then broadcast to, Twitter and YouTube. So if he's game, we've reached out to him a couple different times. He's always busy, which I understand. He's got a family and a job and a life, so we don't bug him a whole lot. Super love T to death. I think that his knowledge and expertise is second to none when it comes to the technical side of this. Far more understanding there than myself. I stay in my lane over here with wealth management, estate planning, and taxes. We obviously have a lot of confluence on our opinions, but I don't know if that's the question you were asking me. Maybe this one. He says, thank you for the super chat, by the way. He says, Jake, I have a decent wallet in a safety deposit box for the last 2 years. I have uptrend my phone since I locked it up. Are there any concerns? I assume you mean updated. Are there any concern with plugging it in for a battery or updates? No, I would do it. I would get it up to date, just so that you don't have any issues. Again, if you, and this is the other thing. I think a lot of people are going to feel rushed when price appreciation happens. Breathe and slow down. You should have a plan. Execute on that. If you have things on exchanges and accounts that are associated with your LLC and your bank account for your LLC set up or your trust, you're kosher. You're in position. You've probably already told your broker at what points you want to sell. They're going to execute those trades. You'll be able to wire that money to your bank account, be able to use those proceeds, as you've planned to generate income and offset your tax implications. Hopefully you've gone through all those things. I would say those things are actually probably more important than updating you're decent. But you did, yeah, I would update it. I don't think that there's any concerns with that. The Ledger deal, and I still don't think there's really any concerns with that. I think people are kind of over exaggerating that, but to each their own. But if it's a decent wallet, yeah, I would go ahead and update it. And I think that's the question you had here. You've mentioned a couple different times in the chat, but I think that was the one that you wanted. And again, I appreciate the super chat. Okay. I would like to see what wallet Elon Musk you think has that holds the 16 million XRP. Or if he said that publicly somewhere, would love to see the video. I'd believe it for sure. Maybe even more than that, but yeah, I mean, he's got enough. He could allocate and hold 16 million of every digital asset if he wanted to. He did sell some of his SpaceX stock last year, and he did pay like $10 billion in taxes or something crazy. But if you owed 10 billion in taxes, and that was 20%, he probably liquidated $50 billion. I'm sure that he could afford 16 million XRP. Especially if, he knows some things, and he knows Peter Thiel, and they know other people, if you do some research, which it sounds like you have. So, getting on down here to the bottom. Victor Wong says, "Hey Jake, how have you prepared yourself mentally and spiritually for the post-liquidity event? Trying to elevate my thinking so I can stay grounded and humble after we come into FU money. Thanks." I'm not any better than anybody else, man. And I know that. I've been humbled a lot of times in my life. Anytime I have gotten an ego, I've gotten in trouble. And just knowing that, what was maybe I don't remember which person it was. I'm gonna probably get this wrong, but I think it was Marcus Aurelius that hired a guy just to walk around and tell him you're only a man, or you're just a man, in whatever Latin. And I've met a lot of in my line of work. I get to have conversations with people that some people put on a pedestal. They're just normal people, and they're cool people. Wealthy people are cool people. My dad had this. He thought that you had to be evil to make a bunch of money, and I don't think that at all. I think that some of the best people in the world are really wealthy because they've been able to create something that provided people a lot of value. Didn't scam their way there. Of course, there are people that scam their way there, but that's a very small portion of the people that actually have money in this world. The people that have been able to generate significant wealth for themselves have solved a problem for a bunch of other people, provided a solution where the other people got more in relative value than whatever they paid them in cash. And that's what I try to create. I always try to create situations where the other person feels like they got one over on me for the amount of money that they're paying for something. And I like that to be like a 10x multiple. Sometimes we don't always get the 10x multiple, but that's the goal. And so if I shoot there and, you get 2, 3, 5 times your money's worth, nobody's ever mad about that. Right. So you're going to have people come out of the woodwork. I'm sure you've told people. I've told people. There's going to be people that show up with their hand out. One of the things and ways to mitigate that I think is useful is you say, hey, absolutely, I would love to see your business idea or what you need the capital for. If you could put that together in a portfolio or a deck and then submit that, you can email me at this address and I'll pass it along to my investment team. And if they feel like it's a good strategy for us to move forward, then we're happy to put money into it. And then they'll be like, well, you have an investment team and like a council and a board for that? Yeah. They make sure that we're making good decisions with the money. And if yours looks like it qualifies for all the criteria, then we would love to invest in what you have. And then there's no animosity, right? They either come back with something really good and you do invest in their company or whatever they need, or they're like, well, I don't have the means to do that, or they won't put forth the effort because it wasn't worth. They didn't really have anything, right? But you didn't tell them no. You just told them you have a process, and then people, some people still get mad, but you don't want those people around anyway because they're there to take advantage of you. So anyway. Just try to stay level-headed. I know a lot of people are going to want to tell people around them, "I told you so," and feel justified and vindicated. You don't need to do that. The way that successful people operate is they cast a shadow so far that other people just shrink into irrelevance, and they compare themselves to you. You don't have to compare yourselves to them or justify yourself. So. Anyway, and I've never had anybody that was ahead of me talk mess about anything. Anyway, that's what I have to say to that. Hopefully that's helpful for you. That's how I think through things. And again, every time I get an ego, the universe tends to humble me. And so just constantly remind myself of that. And even after post-liquidity event, we're still just going to be doing our best to provide as much value as we can and help as many people as we can. And I feel like our work is just getting started for us. So thank you for the question. I'm going to scroll on down to the bottom here because I am going to wrap it up soon. So I'm sorry if I missed your question. But I am going to wrap it up. So we'll get on down to the bottom, and I'll finish with the bottom 3 here. Let's see. Here's one. Dustin says, how plausible do you think the Shane Ellis theory is? I admit I don't understand the exchange order books well enough to gauge it well. So the general premise is there's a situation where the liquidity on those dries up, seizes up. Potentially like a scenario where they sanction Tether. And now that we have the AMMs, there might be a circumstance where there's pairs that are added to the XRPL, where XRP could then be put into those pools to provide that liquidity. And there would be a significant rise in demand under that circumstance to be able to facilitate those transactions. And that'd be a lot of volume on the network. So I think it's extremely plausible. I think a $500 XRP or $1,000 XRP under those circumstances is completely justifiable and has the potential to happen. So is the TPS there to be able to facilitate that? Well, you don't need it to be because you're using the AMMs. You just have liquidity pools where you're locking up XRP to be able to provide liquidity to those pairs, the exchanges. So is that how it shakes out? Quite possible. I'm still pretty confident that we do see, even Brad said on his last interview that he thinks that Tether gets sanctioned. So Brad says it. I've seen things that allude to it. So I'm pretty confident in it. And in that scenario, I think Shane Ellis's theory probably plays out. I'll scroll up here and I'll take one more that I may have missed. Judy. If you guys don't follow Judy Sheldon, I would highly recommend. He's got the quote here. He said, "We may go back to a gold-backed currency in a cryptocurrency type of way." Yeah, I tend to agree with Judy. And then we'll wrap it up here. CJ says, "You're the best. Appreciate you and the kind words, brother." He says, "Can Tether end up on the XRPL after regs hit?" Ripple does use Tether right now in certain corridors for ODL because it is more liquid than XRP. And both parties want US dollars. So they can use it. Is it a possibility that it ends up on the XRPL? After digital identity gets passed, possibly, right? Maybe they sanction it in the short term so that they can rectify things and make sure that it is going to be used effectively, and then it sticks around and it ends up on the XRPL. It's quite possible. Right now, you use Tron and Ethereum, both those networks to move Tether. Tron's fast and pretty efficient. Ethereum costs a lot of money. Yeah, I could definitely see a circumstance where Tether ends up on the XRPL after regs hit. So go ahead and wrap it up there. Thank you to everybody for the wonderful questions tonight. As always, if you do have any questions, you're more than welcome to reach out to me and my team at info@digitalfamilyoffice.io. If you are interested in the community that we've built in the mastermind, we would love to have you there. You just have to friend me or connect with me on LinkedIn first. And then you can go to the site up here. It's mastermind.beyondbroke.com. We'd love to have you there. And as part of our family to be able to, ride it out together. I think on the other side of the liquidity event, that's going to be a really good spot to be, just because those other people have gone through the same thing as you. If you're able to surround yourself with like-minded people in an ecosystem that can kind of shield you from some of the other problems that might pop up, I think it's a benefit. So love to have you there. Again, I'm going to wrap it up tonight. So thank you for joining us, and we will see you guys on the next one.